Has a high debt-to-income ratio prevented you from refinancing in the past? Well, fortunately, there's a new program out. Stick around, I'm going to tell you more about it. Hey, this is Brandon with Integrity Home Mortgage, your local mortgage expert since 2002, and I'm here in the Virginia market. But again, we run this little YouTube channel trying to post as much helpful information we can to our past clients, current clients, and hopefully future clients. Now, we're posting content as frequently as possible, but at least a couple times a week. So go ahead, click that subscribe button, click that little bell as well, and that way you'll be notified every time we release some new information. All right, back in April, we were prepared for a refinance program to be released this summer to help low-income homeowners. And Fannie Mae has released a program called RefiNow. I'd like to review the benefits of this program. Who is it designed to help? How is it going to help them? And what are the changes to the rules? So the main kicker here with the RefiNow program by Fannie Mae, that it is increasing its debt-to-income ratio limits from generally 49.99% up to 65%. That's huge. That is awesome. There are tons of clients that we are not able to assist because they're not meeting the guidelines in that particular area. Now, keep in mind, this is for refinances only. So, refi has really been a big thing over the past year or so with these ultra low interest rates that we've been seeing. So, what's the lowest rate you've seen locked in? Share that information in the comments. I'd love to see what rates people are getting around the country on the refinances. I'll always get into the comments and interact as well. All right, the homeowners that I envision this helping, it's going to be those homeowners that have multiple streams of income, say both spouses work, but maybe one of the spouses' credit is not so hot, right? So we can't list them on the application, therefore we can't use their income. All right, that cuts out a big chunk of the household income that we now can't use for qualifying purposes. And what if the person with the good credit carries all the debt, right? It's gonna look like they are swamped with monthly obligations and just can't handle the outgoing bills. So in this case, this program is for you. This is gonna be perfect for that scenario. It's gonna allow those debt ratios to go from 49.99% in best case scenarios up to 65%. They're gonna be a little bit more lenient in that area, but there are rules that we have to meet. Of course, there are always eligibility requirements, right? The fine print. All right, so again, just a quick recap. Fannie Mae released a refinance program to help low-income homeowners that have been denied refinances in the past due to high debt-to-income ratios. So again, big difference here is they're going to do an extension to the debt-to-income ratio limits and allow us to go up to 65% of your gross monthly income. A huge change from what the original rule was. All right, so like I said, in the mortgage world, we're a bit regulated. We got lots of rules, regulations that we have to follow. So what are the rules and eligibility requirements for Fannie Mae's RefiNow program? All right, the first one, and this one is a biggie, is that Fannie Mae must securitize your loan. Now, that doesn't mean you make your payments directly to Fannie Mae. That just means they essentially hold your loan kind of behind the scenes there. I'm going to post a link in the comments that will allow you to look up your mortgage, your exact information, and see if Fannie Mae holds your mortgage. If they do, we're looking good so far. We're meeting the first eligibility requirement. All right, the second one is, other than being a loan held by Fannie Mae, is that it must be a single family residence and your primary residence. So no 2 to 4 unit properties, no investment properties or second homes at this time. I'll keep you posted as sometimes these special programs do get revisions to include more homeowners and help out more folks there. Now, if you don't have internet access, you can always call 1-800-7-FANNIE, FANNIE, and they'll be able to assist you with the information as to whether or not Fannie Mae holds your mortgage as well. So a couple of options there, and again, I'll put all the details in the comment section there. All right, another big one with this program is there are income limits. So with conventional loans, and keep in mind that's all this caters to is your Fannie Mae conventional loans, Fannie Mae is requiring that we are at or below 80% of the AMI or area median income. What is the limit in your area? Great question. So I'm gonna post a link in the comments as well where you can look that information up. And again, it'll show you what the income limits are based on your particular market. I'm here in Virginia. If you're in Virginia, reach out to us. I'd love to help you out. I can look all this information up for you and take a little bit more pain out of the process for you. Now, with a lot of programs, those income limits are based off of the household income, right? So if you have, an in-law living with you that receives Social Security, although they're not on the application, that income is going to be used in the household income qualification. Can't be used to qualify for the loan, but it's going to be used for those limit calculations. So Fannie Mae has done something unique here that's going to be extremely beneficial. The income limit is not based on the household, but only based on the people that go on the deed. So if it's just one of the two spouses to go on the application and close under the loan, if the deed's in their name alone, we only have to make sure that their income does not exceed 80% of the area median income. So that's a big one there. We're definitely pretty excited about that. They've eased up in other areas as well. So payment history is always a biggie, and of course your biggest factor in what calculates your credit score. But in this case, Fannie Mae is stating that in the immediate past 6 months, you must have no mortgage lates. Okay, so perfect mortgage payment history over the past 6 months. Now, the 6 months prior to that, you're able to have one 30-day late on the mortgage. So, tough time happened in the past, something came up, whatever it might be, you've got a little blemish on the credit report, and as long as it is older than 6 months old, it's gonna be a non-issue in this case. So, another job well done by Fannie Mae under this program. That's definitely gonna allow a lot more homeowners to take advantage of this program and receive those savings. All right, a couple of other standard guidelines that are always in place. What percentage of your property's value can you refinance up to? So in this case, under the Fannie Mae RefiNow program, you can refinance up to 97% of the appraised value of the property. So that's huge as well. Allows you to use a good percentage of the equity in your property if you have been underwater in the past and you're now getting out from under that position with the increased home sales and property values that we're seeing. All right, how about that credit score, right? Minimum 620. All right, now that's interesting because a lot of lenders right now you talk to will tell you they have a minimum score of a 640. So if you're in Virginia, Maryland, give me a call. Let me help you out. Love to give you that excellent mortgage experience. All right, and then again, the last one is that debt to income ratio. So that is huge, 65% of the debt to income ratio. And again, that's 65% of your gross monthly income of whoever goes on the loan application. So if one of the income producers in the household has bad credit, we can leave them off. And hopefully this additional wiggle room that Fannie Mae is allowing will allow us to get you those savings and that refinance to that lower interest rate. Fannie Mae RefiNow, that pretty much wraps it up. Great program for low-income homeowners that may have had problems in the past qualifying for a refinance due to high debt-to-income ratios. We're extremely excited about this. It's going to help millions of homeowners. And so if you made it this far, click that subscribe button. I'm going to provide great information going forward, I promise. I'd like to make sure you do receive it. So click that subscribe button, throw any questions, concerns, suggestions in the comments. Thank you all for stopping by today. This is Brandon with Integrity, and I'll see you on the next mortgage tip.